Hi everybody, Mindy here, and I wanted to do a video tonight about spreads, okay? That's real exciting, isn't it? But I've noticed that a lot of the new Forex traders that I work with, and actually some of the Forex traders that I work with that are actually more experienced in Forex, do not really understand the concept of the Forex spread. And so I thought I'd just do a quick video tonight to explain some things about the spread that you might not be aware of, okay? In Forex, the spread is the difference between the buy price and the sell price of a Forex pair. When you enter a Forex trade, your trade will always start out as a negative PL because of the spread. Your trade will not become profitable until the price has moved through the spread. That sounds kind of confusing, doesn't it? But let me explain it to you. If you buy a Forex pair, your trade is entering at the number on the buy side of the price box. But when you want to close the trade, your exit will be made from the price on the sell side of the price box. So, for you to have a profitable trade, the sell side number would have to be greater than the buy side number was when you entered the trade. The same principle would apply if you were doing a sell trade. You would enter the trade at the price on the sell side of the price box, but your trade would not be profitable until the buy side of the price box was lower than the number that you entered on. Okay? So either way, you always have to work through the spread before any trade you take is profitable. You're probably very familiar with watching the prices in the price box fluctuate, right? They go up and down all the time. The numbers on the buy side and the sell side change almost constantly. But what you're probably not as aware of is how much variance there is in the spread from one moment to another. And it's kind of hard to tell because when you're watching the prices change in the price box, you're usually focused on one side or the other side, depending on if you're trying to get ready to enter a trade, you're looking for the best price point that you want to find, or if you're looking to exit the trade, you might be focusing more on the other side of the numbers in the price box. But what you're probably not paying attention to most of the time is that the spread actually fluctuates too. And here's how that works. When I developed my EA, I had a spread reader programmed into it so that I would always know at any moment in time what the spread was. That way I can keep an eye on the spread, and when I see a spread start to widen, that might clue me in to whether or not I want to take a trade at that moment in time or not. Because the wider the spread is, the longer it's going to take before my trade will become profitable. Other times it might be a factor in when I want to exit a trade. It can also be very important on how you manipulate the placement of your profit stops or stop losses and profit targets. Spreads can vary dramatically depending on what pair you're looking at and what broker you're using. They can also vary on what type of trading account that you have. They can also vary a lot depending on what time of day it is. And that seems really odd to most people. But what you have to understand is that the spread is based on the volatility and the volume of trades that are going in and out of a pair at any given time. Generally speaking, high volume will keep spreads lower. What high volume means is that there are a lot of traders actively trading in the market at that time. And generally, you will have a higher volume of traders trading during the morning hours of the New York Stock Exchange session, right? Or maybe during the first few hours of the European stock market or something like that. You know, when there's a lot of people actively trading in the market, that creates high volume. High volume means that the spreads will generally be lower. High volatility in the Forex market, though, has the opposite effect. High volatility will cause spreads to increase and get wider. High volatility is caused when a lot of traders don't know which way to go in the market, right? Some people are doing buys or sells, or they're doing buys and sells, or they're changing their positions from buys to sells or sells to buys because maybe there's a news event or something that's happening that's causing some chaos in the market or something like that. That creates high volatility. And when there's high volatility, spreads will get wider. So you're probably wondering, well, what about the times when we have both high volume and high volatility in the markets? Well, let me tell you, most of the time when you have both high volume and high volatility, the spreads will widen. It's like the volatility thing always wins out. So when you have both high volume and high volatility, the spreads will generally widen. Now they might widen, but they still might be very sporadic. The spread might jump around from being a half of a pip to 3 pips to 1.5 pips to 2.5 pips to half a pip to 3 pips, and all kinds of crazy jumping around like that. Situations like that can make it very difficult to get in and out of quick trades, right? Because you might think that you have a trade that's worth 2 or 3 or 5 or 10 pips, and then you close it, and all of a sudden you find out that it closed for maybe 4 pips or 1 pip, or maybe even it closed at a stop loss and you can't figure out why. But what's happening when those things happen is that the spread is playing tricks on your account. It's nothing the broker's doing. The broker is not hunting your stops or anything like that. The spread is jumping around and causing your trades to close at places where you weren't expecting them to close. And it can make a big difference on the profit and loss that you have on individual trades. This is also what causes slippage on trades. If you have ever experienced a trade where you had a stop on a trade and then the trade closed and you go in and you look and you say, well, wait a minute, I was supposed to stop out of that trade at 115.47. and my trade closed at 115.53 or something like that. Well, what that is, it's slippage, and it's not a matter of the broker manipulating your exit to try to steal money from you. It's a matter of the spread jumped so fast that the broker could not close your trade at your stop, but instead they had to close your trade at the next available tick. And that's all there is to it. But that's called slippage, and it can wreak havoc with your account sometimes if you do not understand how the spread is going to work and take that into account when you're placing your stops and your profit targets. The reason I'm doing this video is to give you the opportunity to see how dramatically the spreads change. Okay, now right now it's about 27 minutes before the end of the trading week. And so in the next 27 minutes, some of these spreads are going to change dramatically. The change in the spread and the widening of the spread is always the worst at the end of the trading week. But this same phenomenon happens every single day at the end of each trading day. Okay? But at the end of the week, it's the worst. So I wanted you to see that. What you're looking at is a grid of the 28 most commonly traded pairs in the world. Okay, and so it might help for the rest of this video if you go to the bottom of the video and click the little icon to make the video full screen, because I think you'll be really interested in what you see. Because what I'd like for you to do is find the pairs that you trade on this grid. The USD pairs are primarily listed across the top row. The JPY pairs are primarily listed on the second row. The EUR pairs are on the third row, and the GBP pairs are on the bottom row. And then over on the right hand side of the bottom row we have some of the AUD pairs, and at the right hand side of the third row we have the NZD pairs. Anyway, that's kind of how the grid is structured. But you might want to make it full screen, watch the pairs that you trade most often, and you'll probably be shocked at how wide the spreads become at the end of the trading week. What we notice right now is that most of the pairs on the top row, these are the USD pairs, have a spread that is currently less than a pip. Some of them have 3/10 of a pip, 4/10 of a pip spreads, 7/10 of a pip. Now, this is because I use a broker who holds himself out as a low spread broker. One of the reasons they can offer lower spreads than what you might have from your broker is because they charge a small commission on every trade. Some brokers charge no commissions on your trades at all, but what they do is they actually work the commission that they would charge you into the spread that they offer all the time. So brokers who typically do not charge a commission will have generally higher spreads all of the time. But even those brokers have widening spreads at the end of the week. Right? So there is a difference between brokers. You also notice on here that there's a huge difference between the current spreads on the top row involving the USD pairs and the bottom row that involves primarily the GBP pairs. Right now the GBP pairs are running anywhere from, it looks like, 2.1 pips to 4.4 pips. Some of them are already up at 1.4 pips for the spread. And these GBP pairs are always a wider spread than the USD pairs. The reason is because there's less volume of trades happening in GBP pairs than there is in USD pairs. But you can probably tell already how handy it is to be able to look at the current spread in my data box and know instantly what the spread is without trying to do the math calculations in your head as the price boxes are changing prices to try to figure out what the spread is. It makes it a lot easier when you know the spread to make your trading decisions, because it can make a big difference on if you want to take a trade or not, or when you want to take a trade or not. Whether you're looking for a buy trade or a sell trade, or even an exit for a trade that you already have. You'll also notice that I have the EA paused right now, because I don't like for my EA to automatically make trades when the spreads are at a time when I know that they're going to widen. So this particular EA is smart enough to know when not to make trades. And sometimes that's the very most important thing you can do, is to know when not to make trades. I'm going to speed up the rest of the video so that it won't really take another 22 minutes to get to the end of the trading day. We'll be able to see all of the price changes though for the next 20 minutes, but I'll speed it up so that it'll only take about 5 more minutes. Like I said earlier in the video, spreads can widen off and on during any trading day, depending on what the circumstances are at that moment in time. But at the end of every trading day is when you get the widest spreads. Spreads also stay wide into the new trading day every time a trading day changes over from one trading day to the next. But the spreads are absolutely at their highest at the end of every trading week. I normally stop trading about 30 minutes prior to the end of each trading day. And I don't usually resume trading until about 1 hour into the new trading day, because that hour-and-a-half period is the time when the spreads are going to be the widest. And that makes it hard to get out of trades, because if you're just looking for short scalping type of trades, it's very difficult to work through a spread that's 15 or 20 pips wide if you're only trying to make a trade where you're looking for 5 or 6 or 10 pips to begin with, right? So you have to be aware of the spreads at all times. The EA that you're looking at here that tells you what the spreads are at any moment in time, this is an auto trading EA that I developed from a trading strategy that I've been using for 20 years. But the thing is, no EA should ever be a replacement for your manual trading that you do. An EA, even an auto trading EA, should just be an enhancement to your Forex profits. It shouldn't be seen as a replacement for the Forex profits that you get from your manual trading. But if you'd like more information about this particular EA or other EAs that I have developed, go to my website, which is www.mindyyost.com, and you'll find all kinds of information there about different products and Forex education programs that I offer. I'm also a Forex mentor, so I can take students who know nothing about Forex and teach them how to be world-class Forex traders. Of course, that does take some time. It's not something that I can teach you in a week, but it is something that anyone can learn if they try to learn it. And I never give up on my students, so as long as you're interested in learning and growing in your Forex capabilities, I will be there to help you every step of the way. So check out my website, www.mindyyost.com, and you might find something there that you're interested in. If nothing else, there'll be a lot of interesting Forex reading. Okay, so anyway, that's the end of the commercial. But for now, find the pairs that you like to trade on the grid, follow along as the spreads change over the next few minutes, which time has been sped up, so it is not going to take forever to get to the end of the trading day and see where these spreads actually land at that time. Now, the other thing you have to understand is that over the course of the weekend, these spreads will not change until the market reopens on Sunday. Right? And I live in Kansas City, so for me, the trading day will end when the clock up here reaches 1600 o'clock, which is 4 p.m. the afternoon. And so for you, it might be some other time, but the Forex market will reopen on Sunday, 48 hours after it closes. So at 16:01 on Sunday, the Forex market will reopen. The spreads will remain high. They will remain in a volatile state, jumping around from one number to another, but they will remain high for probably about an hour after the markets open. Okay? So when you're aware of that, it will help you to stay out of trades that you might have a very difficult time closing. If you're wondering which pairs have the highest spreads, you might want to watch the pairs that involve the CHF, the NZD, and the GBP, because those pairs have the widest spreads of any other pairs. Okay, so that might be the pairs that you're going to want to pay particular attention to as the time elapses here and we get closer to the end of the trading day. And I'll try to point out some of these as we get closer to the end of the trading day. But for right now, just keep watching the pairs that you typically trade and notice how dramatically the spreads change. Notice how the pairs on the top row that involve the USD pairs, most of those now are over a pip wide, right? That's 3 times the spread that we had just when I started talking in this video. And the pairs on the bottom row that involve primarily the GBP and NZD pairs, some of those are already at 7 and 8 pips wide. 14 pips is one of them. So the thing is, these spreads are spreading. And the closer we get to the end of the day, the higher the spread goes. And it seems like they're changing really, really rapidly, but you have to remember I sped up the video so that it wouldn't take as long. So every minute is only taking about 15 seconds. But the spreads are getting wider and wider by the minute, and they will continue to do that until we get to the end of the trading day. And when trading stops for the day, the spreads will stop changing. Okay, so we'll have that to look forward to here in just a minute. But I do appreciate that you're watching this video, and if you like my videos, go to YouTube and subscribe to my YouTube channel. And that way, every time I put out a new video, you will be notified with an email that I have a new video out. And I try to provide content that is a little different and a little more informative than what most content providers do for Forex. So support me and subscribe to my channel. I would really appreciate that. And if there's content that you would like to see, let me know. Send me an email. My email address is mindyyost@kc.rr.com. Let me know the information that you want. I'll work up a video about it, and that way you'll have it and other people can take advantage of that information as well. Okay, if you look at the clock, it is now 1600 o'clock. The Forex market is officially closed for the weekend, and let's go through and look at some of these spreads and how high they are. As we go across the top row, we see that the AUD-USD closed with a spread of 12.8 pips. Now this is a pair that normally with the broker that I use has a spread typically of less than a pip, somewhere between 4/10 of a pip and 8/10 of a pip, right? The Euro USD has a spread of 9/10 of a pip. The GBP USD has a spread of 10.4 pips. NZD USD 19.3 pips. USD CAD 6.8, USD JPY 4.9, USD CHF 7.2. Now if you're using a broker who is not a low spread broker and one that does not charge a small commission on your trades, you could be seeing a spread right now of maybe 2 to 4 pips higher on every single one of these pairs, right? But the spreads are different from broker to broker, and they are vastly different from pair to pair. So as we go across the second row, these are primarily the JPY pairs. The AUD JPY has a spread of 12 pips. The CAD JPY 14.4, the CHF JPY 20 pips, that's wide. The Euro JPY 9 pips, GBP JPY 23.7 pips, NZD JPY 17.4, and CAD CHF 17.1. Okay, the EUR pairs on the third row. The first one is EUR AUD with a current spread of 23.2, the Euro CAD 10.8, the Euro CHF 7.7, the EUR GBP 3.6, the EUR NZD 29.6, NZD CAD 29.0, and NZD CHF 22.2. On the last row, the GBP pairs, GBP AUD 23.6, GBP CAD 23.1, GBP CHF 12.2, GBP NZD 22.9, AUD CAD 13.2, AUD CHF 22.4, and AUD NZD 22.2. So there you have it. That's how the spreads change toward the end of the trading week. You have to understand they do the same thing to a lesser degree at the end of every trading day. They also do this every time there's a major news event that affects any of the currencies in the Forex world, right? What I'd like to do in the near future is offer a workshop on how to trade around spreads, where I will teach you how to adjust your stops and your limits according to what to expect as the spreads change. If you'd be interested in taking a workshop like that, send me an email and let me know. And that way, when I have enough interest in a workshop like that, I'll get it scheduled. So anyway, thanks for watching this video. I wish you all the best in your trading with your Forex, because I think trading Forex is just the funnest thing ever. And honestly, I believe that it's the safest investment that you can make, because when you know how to manipulate the Forex market to your benefit, you have complete control over every trade you make. And the way that I trade, there's never a reason to ever take a loss in a Forex trade. So let me know if you're interested in taking a workshop, and I'll be doing more videos in the future. Subscribe to my YouTube channel, and I'll see you again soon. So happy trading, everybody. Bye for now.